Hi, this is Michael Kramer of Mock Capital. Today is Tuesday, October 21st, and it's around 5 p.m. New York time. So we will be getting the economic data CPI report on Friday, October 24th. Analysts are expecting core CPI to rise 0.3% month over month and to rise by 3.1% year over year. Headline CPI expected to rise by 0.4% month over month and by 3.1% year over year. And so as we take a look at the euro, what we see is that the euro has been weakening more recently. It's recently now at support, right around support around 116. We can also see that the euro has moved back below a downtrend that formed, which makes it look like the euro has had a failed breakout attempt. RSI is also trending lower, suggesting that the euro may actually be heading lower with a break of support around 115 and a half. It could lead to the euro dropping to around 114. When we move over to the pound, we're seeing that the pound has also been weakening. Right now, support for the pound is around 133. It could result in the pound slipping all the way down to around 130, 170. Again, the RSI is also trending lower, suggesting that the pound is in a downtrend. You can also clearly see that the pound has been trending lower as well. The yen has also been weakening versus the dollar, but trending higher. The RSI is clearly moving up, showing that momentum is suggesting further yen weakening. It looks like maybe we could see the yen rise to around 150, 330 if this trend continues. There was an election in Japan, and there's a new prime minister, and they're looking to spend more, and that could obviously be a negative for the fiscal deficit and could result in higher rates and a weaker yen in the future. Gold prices fell by around 5.5% on October 21st. For now, it's starting to look like we could see gold really fall a little bit further. Right now, it looks like gold could find support somewhere around 4,000, which would be its 20-day moving average. Also, you can see that's where there was some consolidation, at least for a couple of days. If gold were to fall below 4,000 in this 20-day moving average, it could set up a decline back to 3,600, which is where there's more support. Again, gold was very overbought. It's not really surprising to see that it's coming in a little bit. When you look at the other piece here, gold volatility also fell sharply today. And typically when you start seeing volatility go with price, it's usually a pretty good indication of what type of activity it was that you were seeing. And it could very well be that a lot of this was just driven by speculation. We're also seeing signs that maybe Brent oil is getting ready to put in a reversal. We can clearly see that the RSI is starting to curl higher. It looks like maybe we're breaking above a downtrend that's been in place. Brent is also testing a downtrend at 61.90. If we can break above the 61.90 region, it could set up a rally to around 65.30. But for now, we have to wait and see. As long as we don't go below 60.5, I think we'll be okay and look for higher prices. But a break below 60.5 obviously opens the door to moving back into the 50s. The DAX also was a little bit stronger the last couple of days, but again, the DAX has tried its hand at this 24,700 region now on a few occasions, and we haven't been able to break out above it. Obviously, the more we test this region, the more likely it is that we're going to break out. So if we were to get there again for a fifth time, one could probably look for a breakout and a move above 24,700. If for some reason we were to fail right here around 24.3, probably opens the door to moving back down to 23.4. We can clearly see that the RSI is negative, so it wouldn't be surprising to see the DAX move lower again. Break below this 23.4 area opens a path to around 22.5. Certainly with precious metal prices falling sharply, we should be on the lookout for the FTSE retreating back to 91.50. Obviously, if we can see the FTSE break above 95.50, that's going to be a really bullish indication that the FTSE can run significantly further. It's looking like you probably could get up to around this 9,600 area, which is where the upper band would be, and then you could ride along up it. But a break below 91.50 would open up a pathway to around 8,800. The NASDAQ has a clear bearish divergence forming in the RSI. You can also see that the that when you look at the price of the NASDAQ over the last couple of days, we've been seeing these big gap higher following weak closes, and then we gap higher, we traded. Basically, if you look at the NASDAQ and you go back to the 10th, we had that big sell-off, and then on Monday the 13th, we rallied sharply. Then on Tuesday the 14th, we gapped lower, and we've been seeing this pattern now for a couple of occasions, and it looks like that repeated again this Friday with a sharp rally again on Monday. Now, we haven't given it back yet, but I would say given what we've been seeing, there's a pretty good chance that we may actually see the NASDAQ return to this 24-8 period, perhaps before the week is over. It's not much different for the S&P with that weak close on Friday the 10th, followed by the gap higher on the 13th, giving it back on the 14th. Again, not really, wouldn't be surprised to see us go back to 66.6. You can see that 67.50 has been resistance. And with this pattern that's been playing out and really not going much of anywhere, it wouldn't be surprising to see us return to this 66.60 region in the not too distant future. The Dow also recently, it looks like maybe could be putting in a double top pattern. We'll have to keep an eye on it. Obviously, a break above 47,100, that would open the door to much higher prices. But again, you have this straight line rally. You had that weak trading session last week with all the gap fills. There's a possibility here you could be looking at a scenario where the Dow goes back to 46.2 before this is all said and done. Anyway, that's all I'm going to have for you this week. Until next, have a good one. Bye.